Hey traders, Jamie Setley here with your DailyFx technical focus for November 4th. Take a look at the euro dollar coming into very interesting levels, very clean patterns. So let's take a peek. Obviously, so much news event or event risk this week with ECB and NFP. We've also some interesting seasonals down here as we have turn dates from the seasonality really, over the next few weeks. If you remember last year, November 7th, ECB surprise rate cut, supposedly very negative news. Euro actually bottomed on it and then rocketed to new highs later in the year. So not saying the same thing's going to happen here, but, viewed in the context of wave pattern, so much news coming up, that's quite, certainly a possibility that we go to new lows and then reverse higher. So first, the Elliott wave model on daily, you've got waves 1, 2, 3, 4, and then new low in wave 5. We'll zoom into the hourly here in a moment. I do want to point out that a very common relationship in Elliott is waves 1 and 5 tending towards equality. In other words, you take the the high here, so it's at 39.93 minus 35. The low here is 35.02. Subtract that difference from the high here, the wave 4 high of 28.86. That gets you a projected low for wave 5 at 23.95. All right. Also want to be aware of 23.15 as a possible support level if we get there. Okay. Now, someone actually asked me earlier today. It's like, how do I not know that? This is all part of larger wave 4, right? That we go into, say, a triangle where we trade sideways for several more weeks and then go lower, or even a flat in which we'd actually go up here and then to new lows. Well, we don't know. Okay, you never know for certain. But if we look at the momentum and consider what momentum often looks like at a fifth wave low, we can kind of get a sense for what's more probable, right? There's plenty of possibilities, but what's more probable? And at this point, you do have very drastic divergence. In other words, RSI with a new price low here yesterday on the first day of the month, mind you, we have RSI at this low, and its low is actually well above the 30 level. So, this is actually divergence here too. But I don't take a whole lot of stock when the RSI indicator is this low and divergent. What you want to see is divergence with RSI and elevated RSI, okay? The proximity to 50 is always going to be more powerful. It just really tells you that the trend's really petered out, if you will, okay? So let's take a look at the hourly. This is what I'm thinking is going down on the near term. First of all, this decline here is a three-wave move, okay? That tells me that we have, could have what you call an ending diagonal. Some may refer to this as a wedge. Basically, the invalidation level for that would be 27.70, all right? So the implications here for a wedge are that we actually trade a little higher, up into 126 at least, maybe 26.40, and then turn around, go to yet another low, to complete 5 waves down from 28.86 and 39.93, and then we get the big reversal on the upside. Okay. So what would change my mind, if you will? When would I consider a low being in place? Well, really, price-wise, you'd want to see a move above 27.70. You start to get much above 26.40, which is the 61.8 of this move here, and then you're kind of really questioning whether we're going to go to a new low or not. All right. So, right now, just kind of concentrate on the 2600, 2640 as a resistance zone for potentially one final sell into new lows, and then getting a bigger reversal on the upside sometime this week or maybe next week. But that is what I'm looking at with the euro. Okay. So, with the potentially significant turning point coming in the euro dollar, you might want to look at euro crosses. Just throwing some out there, euro Aussie, euro pound, both kind of, coming off of very interesting support levels, might be worth a look. All right, so that's it for me. Take care. Be back Thursday.